All right, good afternoon. Welcome to the weekly take on the market. This is Friday, May 2nd. It's about 11 o'clock Pacific Standard Time, so the market is still open. Most of the day is gone. This was the best time for me to do the video. So here we go. My name is Scott St. Clair. I'll be your host. I'm the manager of the Premium Product Group here, Investors Business Daily. Take a moment to read the disclaimer. I'm not licensed, so I don't tell you what to buy, what to sell, what to hold. All right, there's that. I think we've gone through that plenty of times. We'll do the indices, we'll do stocks to watch, industry groups, and then the quote. So, excuse me, a couple of slides too. So sentiment check. I had this slide 2 weeks ago was the last time I did a video. I didn't do a video a week ago. And sentiment was the highest recorded combination of the VIX, the AAII, and the investors' intelligence. And so no surprise to me, the market turned and has rallied, like 17% in 19 days or something like that. Now, the problem with sentiment is, before it rallied, it was bad and getting worse on the way down. So it's not going to tell you when it's going to turn. But I feel like, especially negative sentiment, it tells you that the probabilities of a turn are there. And so you should be, on the lookout for that, especially if you're short. And if you want to add exposure to long side, I think you start looking for setups as sentiment gets really poor like that. So in this case, and I tweeted kind of tongue in cheek that, will sentiment ever work again? Because it lasted, sentiment stayed pretty poor a lot longer than it typically does. At least in my short-term memory, it seems so. I felt like it was sentiment got pretty bad pretty quickly, and the market kept going down. So, but it took record fear for the market to turn, and so the market finally has turned, and so we're back in an uptrend, and we'll just play it by ear at this point. Where it goes, I think the market could make new highs. I really do, and I'm not today or tomorrow, but eventually for the year. And could go down and test the lows. There was some kind of analog out there about 1998. I think the fact that the analog is out there probably means it won't work. So it'll probably do something in between. So as we sit here today, kind of crazily on April 30th, bullishness was still low, 20.9%. Bearishness, although it'd come off the highs, barely come off the highs, 59%. I don't know how many people they poll in the AAII. And like consumer sentiment, the Michigan survey was really, really bad as well. Some guy said something about how I heard on a podcast, I think, about how sentiment has become a bit political, and if you're pro-Trump or against Trump, or if you're a Republican or a Democrat, you want the market to go down, therefore you're bearish because Trump's in office or whatever. I don't know. I don't know what to make of all of that. That's the problem with sentiment, is it's a secondary indicator. But I would bet a lot of money if I could that next week this number will be different. You'll have a lot more bulls because the market's gone up, and that's what they do. As the market goes up, you'll get more and more bulls all the way up, just like you got more and more bears all the way down until there's, reaches a point where it turns. So I thought this was interesting. I was reading a newsletter, and they were talking about the 1973 market. Treasury Secretary George Shultz was perplexed by the market slump. So we have a lot of recency bias. I don't think we realize that, like a lot of presidents tried to influence Fed officials to lower interest rates or whatever at many times. If you read the memoirs of some of these presidents, I don't read the memoirs. I read what people who have read the memoirs say. Give me the Cliff Notes version. But, he was talking about the market in 73. There are bargains galore. I wish I weren't in the present position so I could get my hands on some money and invest it. And I'll pull up a chart in 1973 where the market was. But the thing I found most interesting in this quote was about the index funds. They made their debut. A couple of index-related mutual funds were started in this time frame. And then the journal said at the time, they won't dominate the institutional market anytime soon. I guess that's a fair statement. I guess it took a long time, but I really love the fact that they said the notion that the market can be beaten is too deeply entrenched for that to happen. So in the 70s, 60s, the go-go years, people were stock pickers. Gerald Sy, Ned Johnson of Fidelity was a stock picker. He loved to pick stocks. They really were out there trying to find the better performing stocks. And it's totally turntailed the other way now. Now all the money is just piled in on the other side. So it's I found this statement kind of I don't think I've ever heard that the people really at that time, according to the journal, believed that you could beat the market. You don't have, don't buy the market, buy the great stocks and beat the market. Fast forward, 35 years or whatever the number is, and it's totally the opposite. So I think it can. I like to pick stocks, right or wrong. That's what I do. Knock on wood. So far, so good. It's not easy, that's for sure. And there's some periods where it's like, gosh, is it worth the effort? But it's very intellectually stimulating, and when you get it right, it can make a big difference versus being in the indexes. So just a little history. Let's pull up the market in that time frame. Let's pull up the Dow, because that was more. I'm going to turn my camera off too, so you can see the chart. So it was around this time, give or take, where the index fund was kind of created. Very small couple mutual funds created it. Vanguard. So fast forward to 77. You can see this is the top in January of 73. And it's just a big nothing burger on the market. If we fast forward to like 81, let's see if we can still see 73. You can't really see it. I think it was 1,000, right? Everybody knows the story, how the market did nothing for a bunch of time, and you couldn't get above 1,000 for X number of years. So, and then the bull market in 82 started. I don't remember exactly. August maybe of 82. Yeah, August of 82 is when the bull market started. And you finally got above 1,000, then it was off to the races. So long drawn out period where the indexes did nothing. And the guy I was reading is in right or wrong. It doesn't mean he's right, but he kind of feels like we're in one of those periods where the indexes do nothing, go sideways, maybe make a high, then go back down, then come up, then come back down. And fast forward 10 years and the S&P still at 5,700 or whatever the number might be. That's possible. I don't rule that out. I don't have a crystal ball on it. I don't know. I'm open to anything, but I don't think a lot of people, as we sit here today, think the market can make a new high. I think that's that would surprise a lot of people. I think there's a number of people, not a lot, but a number that feel we're in a bear market, and this is a bear market rally. And this is all anecdotal evidence based on what I read, what I hear on YouTube videos, on podcasts, etc. And I just kind of like to put it all together into a puzzle. And it's probably honestly like in my day-to-day, it's like a 15% weighting, because I put a lot more weighting on, what the market's doing at this very moment. I don't know if it's fully 85%. There's some other stuff sprinkled in as well, of course, but I do have that in the back of my mind. And so there's a famous saying, like, where the market will go, where it'll harm the most. I don't know if that's the right. I think Walter Deemer has a quote about the market will go where it'll fool or the most people. And so if that's true, then I think the market makes a new high because that would probably fool the most people. Let's go to the indexes now. This is pretty steep drop, and this is could be that most people are probably like, again, I hate I use that word most. I'm gonna have to stop doing that. The medium consensus is it's a bear market. We're still below the moving averages, but this is a pretty powerful move off the lows. We're up 9 days in a row in the S&P. Does that mean it has to go down? No, could be up 10, could be up 11, but usually when you get this kind of power, you go higher. Now, this was a key day for me. You had the bad GDP numbers, market open lower and couldn't go down. So those are really key days to me. When you get bad news and the market can't go down, or if you get good news and it can't go up. So like Tesla, to me, was a really good example of that type of setup. I didn't buy Tesla. I should have, right? But he had really bad news, allegedly. This was the worst quarter ever, is what I read. For some people, actually wrote that down. They said it was the worst quarter ever in Tesla's history. I don't know if it was or wasn't, but that's what they would say. And guess the stock went up. It was up 4% that day, and then it was up another 5% the next day. And here you are off the lows. So when you get that type, the way the market reacts to the news is so key. So the negative GDP print, market tried to go down and couldn't. So it feels like an uptrend, a bull market, whatever you want to call it, and we'll just play it day by day. The NASDAQ. So didn't quite go blue that day, but very close. And you're pushing up into the moving averages. So this is where a lot of people feel like it could fail, and that's a possibility. I don't rule that out, but let's let it fail. So like in 2007, so you don't have to guess that it's going to fail. So just let it fail. So, so here's the bear, and this is an extreme example, of course, but this is the bear market, and you can see how the market rallied up into the 200-day and then turned right there, and you had the start of a failure, and then it looked like a head fake, went back up above. Guess what? Tried to go higher and closed basically unchanged. And then the next day, boom, 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 you're back down again. And then the third try, couldn't even get there, and then it rolls over. And then you get the same kind of thing here. It comes up here and you can't get through these moving averages, and then it rolls over. So you don't have to guess that that's going to happen now. If you're worried about it, it's okay. I get it. I'm always worried about it. But if it does that, then you start to get lighter or get out if you're in. So let it do that versus trying to guess that it's going to do that. In other words, I know it's going to fail here, so why get long or why stay long? I would say let it do that if it's going to do that, because maybe it doesn't. Maybe it doesn't. So it kind of did that here, and then you probably thought it would do that there, and then it was off to the races. And kind of slowed down there, and then it jumped up there. Maybe you thought it would do that, and boom, it's an amazing rally. So you're better off waiting, allowing the market to give you the signal. I usually take a single day signal. Maybe you need 2, 3, 5-day signals or whatever it might be, but you're gonna get some kind of feedback that something's wrong along the way. It's just, barring some kind of incredibly bad news out of nowhere, it's just not going to open at 16,000. It's good for it. If it's going back to these lows, guess what? It's going to do that over a number of days to weeks to months. And so you're going to have lots of signals if you're willing to listen to what the market's telling you. So right here, as you see there, I don't remember exactly where IBD is. I know they were just kind of slacking about exposure. I think we're at 60 to 80 or 40 to 60 or something, or maybe 40 to 60. I think that's appropriate. If you're on the higher end, that's fine. I am. But I'm a lot more aggressive than that. So if in this type of rally, I'm probably going to do a lot better than the average person, but I might get hurt a lot more on that type of rally versus the average person. So like here, I might start to get really, really heavy and then have to get out. So you take the good with the bad. So I'm a little bit more aggressive. I felt like there was stuff to buy, and so, but I'm not I'm not on margin in my margin account, and in my cash accounts. What am I? 50 more, maybe. I don't have any shorts in my margin account. No reverse ETF. So I don't know. I don't know the number. It's not 100 though. That's for sure. I definitely have buying power, and I'm waiting. I'm looking for setups to use it. And every day it seems like the market's giving you more and more possibilities. All right. So that's the NASDAQ. That's the S&P. Let's talk about gold. Did I talk about gold being climactic in the video, or did I do that on IBD Live? It's hard to see on a chart like this, but this is a really pretty good move. 275 down up to 317. That's 15%. That's a pretty steep move for gold. It felt climactic. I am short gold, and it was a little bit on some signals that a friend of mine gave me based on like DeMark counts. I'm not going to get into DeMark counts. I don't know them that well. He just gives me the signals, and I use them accordingly. But it felt like I could see podcasts about the dollar and gold going to the moon, and that was that sentiment thing. So he told me that in his work, gold was very potentially exhaustive move up. I was seeing a lot of sentiment that, gold is the new thing to own. And so I put those two things together to create a short. It was pretty painful at first because I shorted there or there. And I was short on this day, and in the next day, the next morning it opened a little bit higher. And so yeah, it was pretty tough to stay the course. It hung on for dear life, and now it looks like it's going lower, I think. So if gold is going lower, then that also bodes well for potentially the stock market, because the money has to go somewhere. It's going to either go into bonds, it's going to go into gold, it's going to go into real estate, it's going to go private equity. It just doesn't disappear. It goes somewhere. So money flying out of gold could be pretend for the market going up. Here's the bond market. Now, I just don't see. This is TLT. There's just no signal there. There's just nothing there for me. I'm not good at the bond market anyways, but I just don't see any kind of thing to do here. So there's that. So I'm going to try to stay in my lane as far as bonds and interest rates. I don't think Mike Webster would often say Bill never talked to him about what he thought the bond market was going to do. So I'll leave it at that. World markets. So there is it, I should know the ticker since I own the darn thing. So Advantage, this is an international small cap ETF with X exposure US. Now, it hasn't really gone anywhere, but maybe this is the time. It's coming out of a long base. Maybe we'll have to see. But international markets are holding up pretty well, and so maybe that's where the money can, that's the leadership. That's the one kind of fly in the ointment, honestly, for me about the market is I'm not exactly sure where the leadership is. I wish it was more like, and in hindsight, it wasn't this easy. So don't get me wrong, but like, I know there was times where the portfolio managers O'Neill would be like, the market's strong, and they just buy Google. It's the leader. Just buy Google. Apple. Just buy Apple. It's the leader. Just buy Apple. NVIDIA was the one for a while. Like if you thought the market was going to go higher, just go buy more NVIDIA. I would often say on IB Live. You want to buy Marvell Technologies, buy more NVIDIA. You want to buy Avongo, buy more NVIDIA. And, and that worked for a period. So I wish we had that type of leadership, a stock like, in this time frame. It's like, the market's going up. Let me put the index across there. So market's rallying, and this isn't drawn to scale, but you can see market's rallying. So, every time you want to put on more exposure, you just buy more NVIDIA. Just buy more NVIDIA. I don't know what the stock is for this rally. I'd love to know. CrowdStrike made a new high. It might be Palantir, to be honest with you. That might be the one. Now, because if Palantir has become, like, I do own this, and it's just really hard to buy. I mean, it's doubled off the lows almost. And to me, this was a double bottom. And so the buy point was there. And so, it's up about 23%-ish or more from where I bought it. And it doesn't pull back, right? So every time, you want to buy XYZ, I maybe buy more Palantir. Maybe this is the one. Maybe this is the one. We'll have to wait and see. This is a really deep base. I was kind of hoping for a handle, but I don't know. There's the GDP print. Stock was down. I thought, okay, good. We're going to get a handle, and they just can't get it. So it might go to new high without a handle. Maybe then it'll be like maybe it builds what we call like the high handle or something. So yeah, that's the only fly in the ointment. I wish there was, a go-to leading stock where I could just buy more of that one instead of trying to find a new name. It's out there. If this rally's real, it's out there. I'm just not sure which one it is. All right. So let's go to industry groups. Mining gold, silver is number one. It's been on a long run. I think that group is tired. That would be an avoid for me. But obviously, if I'm short gold, I think this would go down. So I would pass on that group. Medical, wholesale, drugs, leisure, movie. Why? Netflix powerhouse. Aerospace, defense. A couple really good stocks there that I'll talk about in the next section. Tobacco. Philip Morris International. I can't remember that. I'll pull that one up. Acting super strong, but the international one, very interesting. Wholesale auto parts, banks foreign. I do have a position in a banks foreign, so acting really well. It's computer software security. That's like CrowdStrike, Red Brick, RBRK, or is it Rubrik? I think it's Rubrik. There used to be a company called Red Brick Systems, so that's why I said that. Computer software. So utility is kind of back in the mix. I do have position in that area, 2 stocks actually. So we'll look at that group. Utility electric power. This is gas distribution. I apologize. I think the ones that I have are in utility electric power, and so on and so forth. So the key is on the weekend, I'm going to go through 3-month, 6-month, and just look for delta, which groups are moving. Like auto parts, 121 to 22 to 6. It's a pretty good move. Computer software security, 28, 12, 9, right? So you're trying to get in front of that. 118, 28, 12, 9. You're trying to get in front of that delta that's moving in the right direction. So do that work on the weekends. I've talked about the groups have not been as good a signal maker for me in a handful of months. But that's just me. They're doing their job. They did a really good job for gold and the defense stocks. I kind of missed the boat on that, though I did buy one a little late in the game, but they did a pretty good job of identifying that strength as well. So don't give up on that. I think, I got a little lazy and stopped looking like I should every week. I'm going back to that. It doesn't take that long. I mean, I literally could do exactly what I just did here in this video, 3-5 minutes. And then if I get a signal, spend a little bit more time there, but it's worth it. if you can just sort of, I think what happens to me is like aerospace defense. I might have talked about this. I got a bias, like where are those stocks going to go? So even though I might have seen the groups moving up, my bias would have prevented me from participating. And that was the wrong move, because there was one that really moved that I bought and made a little bit of money. But if I had been more proactive in the group, could have made a lot of bit of money. All right, so let's go ahead and jump to the stock. So let's talk about like the big boys, NVIDIA. I'm gonna take the index across the top off. So they had bad news and the stock gapped down. I think it gapped down here this day, maybe. The thing I found interesting, down 6% that day, it was, that's not a good day, is that again, it was seemed like really bad news. They're going to take a really large charge, and yet the stock couldn't even gap down and make a low. Like usually when the stocks gap down on bad news, they gap down, they make new lows. They trap people, and it didn't even do that. So I don't want to be short NVIDIA. I don't really want to be long it because I feel like it's a little waterlogged, over-owned, but it is going to be vital to the overall market for sure. So you have to kind of keep an eye on it. Amazon, not all that great. Apple. So this is another sign. Apple had bad news, and it looked like the market was going to open lower. Last night, the futures were down. I guess there was some chatter that the Chinese were going to send a representative to talk to Trump's team. And that kind of, for lack of a better word, rescued the market for the day, at least. And now the futures are up. So we're kind of in that sweet spot where bad news is not that bad news, bad of news, and good news is good news. And so Apple, if you told me, hey, Apple's going to be down 4%, what do you want to do with the NASDAQ? You have to be short or long it. It got run over today because that would be an easy decision. You would want to be short it. So the market's kind of ignoring that type of news. Microsoft had earnings the other day, gapped up. It's just kind of a no man's land. I don't even watch Microsoft. I think you just buy the cues if you had an interest in Microsoft. Meta. So this was tempting today. I think this, I don't know, kind of alternatively, this possibly could be bought if you wanted to put on more exposure and you needed big and liquid. I don't own it, but I actually thought of it this morning, or thought about it. What else is in there? Google, another one. I just feel like they're just too big and too over-owned. Right or wrong, I just have a hard time with the mag stocks. So it is triple levered, so it's going to exaggerate the move. So this is the FANG index. And I did look at Tesla earlier, right? I don't know if Tesla's in the FANG index. I think maybe they took it out right before it did that. So NVIDIA, Netflix is the leader. Look at that move off the lows. So right, 1, 2, 3, 4, 5, 6, 7. So up 9 days in a row. Does it have to be down? Nope. Here's day 10 if I counted that right. So that can happen, but you see the power of when they start to get going. So this is the leader in that group. So FANG A, and now this is triple levered. So you have to remember that, right? But it's gone from 217 to 448 off the lows. I mean, nobody's going to buy the low unless you just randomly get lucky. But it's up over 100% off the low. So that's pretty stretched, and I would expect some type of consolidation like that. That would be ideal. It doesn't have to do that, but that's what I would expect. So if you run in and you say, okay, the coast is clear, it's okay to buy. I don't know. I just find that hard to do because it's made such a big move that a normal reaction would get you knocked out of the box. And so, yeah, I think you have to consider that. I know we're looking, it's where stocks are going, not where they've been. So it doesn't matter that it's been 217. It doesn't matter that it's been 690. Where is it going? That's why the most recent action is most important. Looks like it's going higher, but I think you have to consider, like in the short term, where it's come from at least a little bit. You don't want to totally ignore that. So it seems a little stretched, and that's why I would love for the market just to quiet down for a number of days. So let's go to crowd. So broke out the cup with handle. It's up 11%. If you bought that pivot, it's acting great. RBRK has not broken out yet. I think you could have used kind of a Livermore +3 and bought it somewhere in here. And so and that's how I handled it. It felt too far away for me. Once I decided that it had really good leadership, sometimes I have to admit, like I'll see the stock 60 and I'm 62 or whatever. It's like, am I really going to wait to 76 to buy it? I just sometimes don't want to wait. Just impatient. Just feel like I could put on a little bit at 62, and I don't mind buying more at 76, but I want to have some at 62 or 64. So this one now smaller, much more volatile than CrowdStrike, but exhibiting leadership. What's that Philip Morris one that I was talking about? International, is it PMI? I can't remember. Let me see if I can find Stocks and Group. PMI. Oh, it is PM. Okay, it's the old Philip Morris symbol. So look at that. I mean, breaks out and just trending. I don't know why, but that sure is acting good too. And so I wouldn't buy that, but that's my bias, right? The group did its job to alert you to that. In the defense, you have ESLT, kind of a declining tops line. Looks, I think Mike Webster had this as like kind of the spirit of a high tide flag. So it's right in that area of potential buy point. And then you have the German one. It's RM. This is the one that I bought. RH. Can't remember the ticker, so I have to do Rheinmetall. So this looked very high tide flaggish to me as well too. So I bought that week right there, and then pulled back a little bit, and then I bought more this week. Now, as we sit here, because I feel, gosh, again, it's human nature, where was I at 50? Where was I at 100? Where was I at 140? So for me, I would have a hard time holding this because I feel like I'm a little late to the game. So I'm just more short-term oriented for it. So I have gotten out of most of the position, FYI, for whatever it's worth. Did I do the Chinese stock? So Baba, I do have a little bit of this, and I don't know what to do with this one here. I don't want to add. I want to sell, but the problem is I have so little of it that I'm not sure I should sell it either. So it's kind of a weird position, but acting a lot better. The weekly looks okay. Doesn't look great, but looks okay. But at least they're acting better. Stop going down. Melly broke out double bottom. It's up a little bit. C Limited. So I think this is a double bottom. That's how I would buy that. Again, that kind of whole thing. I like it at 135. Why am I going to wait for 147? Excuse me. So this is one that I own. Palantir, double bottom, I think. RS Line Blue Dot, just power. I think this is the leader. If you force me to choose, this is the leader. Now it's stretched. It's almost a double off the lows. I'm dying for a handle, and if we get a handle and it starts to go, then I'll most likely buy more. So there's stuff to buy. If anything, if you just were like not sure of the market, which is fine, I don't have all the answers. I have a little bit of fear of the market, like everybody. I think CrowdStrike, Palantir, you could have, let's say a 5 to 10% positions in those. What about Netflix? And maybe a 5 to 10% position in that. And you could be just in those three names, 25, 30% invested and getting feedback from the market, right? So You have stuff that could have, now that would have been 3 for 3. Maybe you got one wrong. So you were 45% invested and got one wrong. That's fine too. But you can see how the market slowly pulls you in. If you have those 3 stocks, you're probably in the mindset of adding to them and or trying to find other leading stocks. What else is there that? Oh, in the energy group. So Talen Energy, and this isn't a double bottom because it didn't undercut. So it's a little tricky, the daily, but this look, RS line new high, made a big move, consolidated. I do own this one. And I just think I'm just going to use the 220.59 was kind of my pivot. And that's where I first started buying it. So I don't have a big cushion, but this is like a potential leader, I think, as well. So then also you have like VST in the same group. Double bottom, maybe, sure, why not? No, it's a little short, but I think this has sponsorship, Contra Fund, MFS Growth, although they kept their same position, but Contra raised their position. A couple of hedge funds. I think David Tepper is it Tepper that has a position in this, or Burbank, or one of those really good hedge fund managers. Druckenmiller has a position in this one. So this is, and then CEG. This one's CEG I found to be really difficult. I identified it and just never did super well in it because I was a little late in identifying it. This was the perfect spot to identify it. So I was in here and then, so it jumped. It just got real choppy. And so I just never was there for the big move, unfortunately. So I'm not going to do this one, but I do own VST and Talon, the TLN. I think that's it as far as stocks. Yeah, I think that's enough. All right, so let's talk about the market. I think this is important, the overall market. William O'Neill, I don't know if this is the exact quote, but Scott O'Neill would quote his dad as having said this all the time. All the time he would say this. We're not in the prediction business. We're in the interpretation business. So we don't need to know where the market is going to go. I don't know. William O'Neill, when he was the supreme top-notch market operator, he doesn't know or didn't know. Mark Minervini, he don't know. They just are amazing interpreters of what the market is doing at that very moment. So you don't have to know. Just look at what the market is doing day by day. As humans, I don't know why, but we crave certainty. Is the psychological crutch that we have, I guess. And I find that ironic that we crave such certainty as a species if we've really lived through absolute total uncertainty for thousands and thousands of years. I mean, if you were to bring somebody, I'm going to go off on a tangent. I apologize, but if you were to bring somebody back that died 200 years ago, they wouldn't be able to believe how we live, what we have, the things we have, and I wonder if it's going to be the same another 200 years and I'm long gone. If the way people live 200 years from now might be just totally incredible compared to how we live now. So things are changing all the time, and so to try to predict it is impossible. Is the short answer. So observe it every day. What is it doing today? Seems to be acting okay today. Therefore, you just stay with what you have. You want to add to it? Sure. You don't have to be in such a big hurry to add. And so it feels to me like this is not the best spot to add on the market, but I wouldn't fault anyone for adding here because of the way the market's acting. It's acting so well. I would be in the wrong. It could turn, sure, but maybe what are the odds? So it's had a couple of chances to go down. They've had a chance to take the market down. They had the bad GDP number. They had the Nvidia news. They had the bad Tesla news. They had the Apple news today. So they've had lots of chances, and it just doesn't seem like it wants to go down. So that's the way I look at it as we sit here today. And Jawad Mian is a newsletter writer, podcaster. I don't know if he's really a podcaster, but he has a podcast. Everybody has a podcast now. It's incredible. But way he said it very eloquently, he says, "My task is not to see the future, but to see the present clearly." So I love that quote. And his quote reminded me of Bill's quote. And that's why I put both of them in there. Two different thinkers. Jawad Mian is not, I guess he writes a newsletter, doesn't run money or anything like that. And so he's just like a thinker and a writer. And Bill was a market operator at the top of his game. And they both basically said the same thing in different words. But so you don't have to see the future. You don't have to know where the market's going. You don't have to predict that it's going to make a new high. You don't have to predict that we're in a bear market. You don't have to predict that it's going to create the 1998 analog. I think that people crave analogs because it helps them to make a decision. Like if you're uncertain of what to do, you run to an analog, and the analog says, "Oh, the market's going to do this, and therefore my decision, well, if the market's going to do that, then my decision should be to be long or to be short or to be cash." And that's what helps us push us over the edge if you're indecisive about your decision. So, but that is impossible to know. All right. So let's see the present clearly. Let's see what the market does. I'll be back next week. MarketSurgeonInvestors.com, 800-831-2525. Have a great weekend, everybody. Thanks a lot.